Good day, fellow investors. There have been several comments asking me to look into Pabrai's recent buys, especially Valero and Noble, but also Warrior Met Coal over the last months. So let me give you my opinion on Pabrai. Enjoy listening to him, always great stories there. But we have to check this from a value investment perspective. Of course, Pabrai is known for being Munger's bridge partner, friend, and also for doing well with his first Pabrai investment fund. Then he opened more funds over the years, going into the Dando funds, the Unknown Zero Fee funds, now also lately the Pabrai Wagons fund, where you can also, I think, buy shares in. And this is, of course, with a fee. If we look at his ventures, he also tried insurance like Buffett. He saw that it's not that easy, so he closed it down and returned money to shareholders, so a fair try there. But he is famous for the dinner he bought with Warren Buffett in 2007, but also for doing a great return when he started from 2000 to 2014, where he did 25% per year, and chapeau to that. However, since then and this great return, his returns have vanished from public, and some say they were very negative. For example, 2018, he did a lot great returns, especially taking advantage of the emerging market commodity boom that happened from 2000 when he started to 2012-13. So that really created his exceptional returns. But to be honest, over the last 10 years, he has been struggling significantly, and you see him opening new funds. But okay, 10 years, this, as we will see later, he says, it's a marathon, it's not a sprint, so you cannot compare those things. But the key is always, you see how an investment strategy fits you, and then you see whether he is your money manager or not. As simple as that. And this is the copper chart, and you can see here 2000s, early 2000 copper, oil, and things like that. He invested in Frontline here, exploded over that period on growing demand from China, exploding emerging markets, and that is how he made his money. However, since he also does well, he has 1 billion in assets under management, but he has not done 20% per year since 2000, because if he started with 20 million at 20%, he would have 1.6 billion of his own money managed. So over the last 10 years, it has been a struggle. I know his India funds also didn't do great, but we are where we are now. Let's discuss the strategy and analyze the situation. Perhaps in the next 10 years, he'll again destroy the market and then remain a great investor forever. The strategy is hold on to great businesses for dear life, wide moats, and proven ability to reinvest capital and higher rates without accounting gimmicks or much leverage. Okay, you can check your stock also there. So he's long only, public equity, globally opportunistic, concentrated, that's not 15, concentrated in my eyes is 3 to 5, not 5, 15 to 25, but okay, discounts to intrinsic value, standard value, investing, good management, and things like that. So underperformance since inception, but that's just over the last year. However, we have to staple the underperforming other funds from the last 10 years. Let's say we are now at the mid-distance for Pabrai, and we have still 10 years to see how the marathon goes. But this is the key now, and I don't think he is aligned with what he sees with Warren Buffett. He's amazing at telling the story, but telling the story is one thing, putting into practice is something else. Warren Buffett made 12 truly good decisions over his 58 years. However, if I look at Pabrai's portfolio, there are many decisions there. Okay, we have Edelweiss. I don't know, this is an Indian company. I don't invest in India, can't invest, don't have access to those markets, so I can't help you there. Turkey, also not my circle of competence. We'll discuss Warrior Met Coal. This is Turkey. We'll discuss Valeris, similar to Noble. And then, okay, coal. We have already discussed Occidental in a video. I'll put it in the link in the description below. And here you have the key portfolio buckets, but 7 key buckets. So Pabrai already found 7 ideas now, while Warren Buffett found 12 ideas over 58 years. So this is already in contrast with what Warren Buffett and especially Charlie Munger have been preaching. And then again, this is a fund. I think the fee is 1%. The current gross fee, as the investments are still low, is still 5%, which is crazy. So I respected him for the zero fee funds, but he has also moved away from that, as he didn't make profits likely there. Here you have the expense ratios, which are insane. For also redemption, okay, first 90 days, that's not that much. But okay, this is a fund. Fund means people, funds means costs, funds means limitations that Buffett doesn't have. Fees, what? Funds invested at all time. You cannot have cash like Warren Buffett has. Buffett has 33% in cash. So whenever you start working on the business, you forget about the real principles of investing, and that's something that I see here Pabrai getting lost perhaps into. I wish him to do well, but let's analyze a little bit stocks and start with Warrior Met Coal. I have made a deep analysis of coal here in this video. It's a really good one, so check that in the links in the description below. And now let's look at Warrior Met Coal. The stock is down over the last year, and the key factor when it comes to coal prices, you have to look at the cost. And the costs are 180, and usually at the bottom of a cycle it stabilizes for a while at 75% of cash costs. This is the true situation with coal. We do not know when we'll see higher prices again. That is the issue. And as there is more supply likely here, you can see here that even the upside is limited for now. Now, you can check all-in cost curve, but all-in is a very, very long-term effect cost curve, and therefore all-in, we can go to 50% of all-in for a bottom, and that's still around 150. So yes, higher developments will be delayed and things like that, but that cycle lasts a few years, and for now prices in 2025 are much lower than also in the last quarter of 2024, so the numbers here will be lower in 2025, and that might put more pressure onto the stocks. However, we have to look at this from a long-term perspective, and if prices stabilize, then the free cash flow from Met Coal will be 800 million per year when they develop their Blue Creek mine. 800 million compared to the market cap, that's a P ratio 3, and that is why Pabrai is investing. So a very cheap coal opportunity. However, they still need to develop the mine, and we'll discuss now the conference coal. And the key is also what kind of coal. It's not just met coal, it's high grade, A volume, this or that. I'm not a specialist, but they will supply a lot of, I think, high volume A coal where there is plenty already of supply, which means that the realized prices will be just a percentage of the coal price index. Another thing to think about. And then if there is a longer term downturn, covenants, changes, no covenants because there is no debt, changes in contracts might apply and things like that. There is always something going on with mining. And if you go to the last conference call, you see how things go there. Prices have dropped by 40% per short ton compared to the last year's quarter. High volume products has decreased 43%. So weakening steel making, coal prices, trade flows have been impacted by retaliatory tariffs, also something to think about. And then they are still investing, they have the cash to develop the mine, no issues there, absent any unexpected or unusual event, which is also something that can always happen with mining. So the cost of sales was lower because the transport cost went down, but I think it went from 50 to 30, now in the mid-30s, but you never know when those will go up, will go down. High vol A prices, PLV, so there are really many factors that work there. And you can pause these slides and read if you don't go to the conference call transcript. Do you think there will be some production going away and then balancing the market at the higher prices? And that's very difficult to predict because everyone thinks they are a low-cost production. Keep in mind, Blue Creek will add 6-7% of global supply, again possibly pushing price lower. So even if the expensive go away, new supply comes in, and that is the commodity market. However, they have 500 million on cash, so no debt, no problems there. And I think that if, and that's the bet Monish Pabrai is doing, if this happens, they make 800 million in 1 or 2 years over the next decade. That's the margin of safety. They have no debt. They should do okay. And at any point in time, the stock can be a 3x and Pabrai makes his money. The same as he did in the early 2000s. So that is the kind of investor Pabrai is. Once you make your money at the beginning of your career, I made it by buying good businesses at a fair price, and I'm still looking for those good businesses at a fair price, rewarding me dividends, earnings, growth. Pabrai made his money by betting on those irrational pricing opportunities with huge upside based on high uncertainty and possibly low risk. You have to accept that volatility. However, the key question is, he is not the decision maker here. His investors are. And if his investors remove the money from his fund, then it gets uglier and uglier for him. And that is then the issue in the fund business, in the partnership business, in those businesses. You might have the patience as a long-term investors, but your investors might not. So I hope everything goes well for Pabrai. And same situation here, we can discuss Valeris. So offshore accounts for a third of global oil drilling, therefore it will be needed. And this is the Valeris, they own these huge ships, so it's not easy to build a ship like that. However, it is still a competitive market. Anyway, they are guiding for 560 million of EBITDA guidance, will likely be 250 million of free cash flows when you deduct the capex. They have Petrobras as the main investor, Equinor, Shell, and we have discussed all these stocks. Equinor, Petrobras a little bit more risky, and we'll see how these investments go. US and Shell too pricey for what they are offering. However, deep water production, they expect it to have an increased role in the oil demand over time, that it will just grow, which means more demand for these ships. More demand from ships, they expect higher prices, more projects in 2026, 2027 after a pause. Then they expect higher drill ships average daily revenue, higher usage because it's not used every day from what I see. And then depending on the earnings, cash flows, you can see here free cash flow on higher prices, drill ship daily rates, even going to 1.2 billion. If we check Valeris stock price, so that's a 50% cash flow yield if drill ship rates go higher. That is possible, you never say never, but that is the kind of bets Pabrai is making. Let's say low downside and very, very high upside in that market exuberant situation. If I look again at the conference call to look a little bit at the discussion there, So the programs expect to continue because the break-even prices are below 50 per barrel, but keep in mind this is supply and demand. If the hire gets scrapped, there is simply more ships, so supply goes up and demand goes down, which means daily average rate prices go to 200, and then you are in a pickle. That is the situation there, but for now everything looks good, and when 2026 and 2027 comes, it should lead to higher prices, all else equal, and also the stock should go higher. So you should have to accumulate now and wait there. However, utilization for the global market fleet is just at 90% for the jackup market, declined from 94%, so that is always something to keep in mind. There is some debt, of course. The stocks are trading, I think, not producing any accounting income for now. The stocks are trading a little bit up than the equity value, but you see this, it can also go lower, you have to accept the volatility, but when things look good, it might also spike for 2-3x. However, again, going back to Charlie and Warren, this is Valeris 2020 going bankrupt, Chapter 1 restructuring everything. Noble also emerging from Chapter 11. Warren Buffett would never go into a business where every 10 to 20 years you go bankrupt. So again, a bet Pabrai is making likely will not go bankrupt again after 4 years, but maybe it will go bankrupt in 2030. That's something I don't know. I hope Pabrai makes his money sooner, and perhaps even oil will boom again. It's enough that it goes from 70 to 140, and Valeris and Noble are a 4x as a stock. However, here you see coal prices again. If coal prices just go to 200, and this is not met coal prices, just coal. Met coal goes to 300. Met coal is a 3x just like that. So that is the upside. The diversification should limit the downside on Pabrai's portfolio. As I said, I don't know about Edelweiss. He says it's a 4x on 4 spins. Now at 1 billion market cap, the value is 4 billion as the company spins off. I don't know much, but recessions, panics, margin of safety with debts. So these are these. Okay, there is some risk, not crazy risk, but there is some risk. Warren Buffett wouldn't do it, Munger wouldn't do it, but Pabrai is doing it because it worked great at the beginning of his career. Now you have to see if these, I would say, low to medium risk, high upside bets work for you. For me, I prefer more stability. I prefer to sleep better at night. Not that all the investors come chasing me. Oh, Sven, your stock is down 50% in 2 months. I've been there. It's not something I want to go back again there. So that's it. I hope you enjoyed this video. Thanks for watching. I'll see you in the next video.